Welcome back. Pankaj Naik, Director at India Ratings and Research, is with us. As we were just telling you, the India Ratings came out with a bunch of reports on the BFSI space, outlook for 2025, and Pankaj tracks the microfinance space as well as NBFCs quite closely. Pankaj, great to have you on. Thanks for joining in. So I want to start with NBFCs because there's been plenty of news flow over here when risk weights were tightened by the Reserve Bank of India a couple of months back, right? And the whole debate was on whether funding will get more costly for NBFCs, would it squeeze margins? So what lies ahead in FY25?
Yeah, so you're right. I mean, post the increase in the risk weights, obviously the funding cost increased for NBFCs from banks, and banks had already taken a good amount of exposure on the NBFC sector per se. So we had factored that in, and we did articulate that the margins will see some compression, which we saw in FY24 till 9-month FY24 results reveal that, and we believe that the rates are going to be elevated. Even for FY25. So the margins will be under pressure, even for FY25, at least in the first half, because our house view is that the rates will remain elevated. There won't be any softening of rates for H1, FY25. H2 may see some softening depending upon the data that comes out from the macroeconomic fundamentals.
Quantify the pressure? Pankaj, can you quantify the margin pressure? By how much are you expecting margins to be squeezed? And is this for large NBFCs, mid-size? I mean, is it across the board?
Right. So the increase in risk weight was around 25% odd for all those exposures which were not at 100% levels, right? Now, those are all NBFCs in the AAA, AA and the single A bracket, right? So they obviously will see a bit of an increase in the funding cost. They have already seen that. Repo rate also did go up, right? Which also played on the funding cost. So we believe that for FY25 margin pressure will be around 40 to 50 basis points for the sector. Already there was a margin compression that we saw. So NIMs will be compressed. But another factor that needs to be taken into account for NIM compression is the leverage. The leverage was extremely benign. During the pandemic impacted fiscals, leverage was very soft. The leverage started increasing in FY24, and we believe in FY25, again, the leverage will go up. So the amount of equity contribution that goes in growth, that particular equity contribution will go down. And because of leverage increasing also, the net interest margins will be under pressure.
Right. And that is one bit that you have highlighted as well, right, in your note, Pankaj, that you are watchful of the stress that is building up around the fintechs in FY25. How much of that will have an impact on the overall space as a whole of NBFCs? Do you have a view on that as well?
Right. So fintech space is being closely watched by RBI, and they are coming up with guardrails for this particular sector. All those fintechs which are into personal loan, that is a consumption-driven loans, obviously there is an increase in risk weight, and the funding cost is going to increase for the fintech space as well. But you see the fintech space is evolving, right? If you add up the AUMs of all the fintechs that are operating, it is not that high. So from the NBFC perspective, the overall sector perspective, fintech is a very small space. But the thing is the fintechs are interconnected with banks, with NBFCs. Because larger NBFCs are into tie-ups with fintech. Banks have taken exposure on NBFCs who have taken exposure on fintechs. So because of this interconnectedness, I think the risk gets elevated. So fintech will be seeing a moderate growth in FY25 because of the regulatory angle that has developed. And even the funding partners for fintech will also be very, very watchful in taking incremental exposures on the fintech space.
Pankaj, let's also bring in a word on MFIs as well. I mean, both NBFCs and NFIs. Would you expect margin compression there? And I also want to move to the asset quality part of the conversation, because the rise in risk weights was all because the RBI felt that the system was getting a bit too heated on unsecured lending. So what is the asset quality outlook, and specifically also the margin outlook for MFIs, if you could tell us?
Yeah. So till now, when we see the data, even the softer delinquencies do not see any pressure as such. As far as the fintech space is concerned, they are still very, very range bound and in that predictable trajectory. But if there is a slowdown, if there are job losses, if there is a demand compression that happens, then obviously because of the exposure that fintechs have taken on the profile of customers who are not as strong on the credit profile front, then there could be some delinquencies, some bounce rates that we'll see in this particular sector. Till now, the numbers are comfortable. The credit cost was elevated during the pandemic impacted fiscal, but that has also got corrected now. So it's a business model which is evolving, right? I mean, many of the business models are getting fine-tuned even now. The underwriting engines are getting fine-tuned. So from that perspective, fintech or unsecured lending is a space on which we are very, very watchful, especially on the funding side. Because there is a lot of regulatory guardrails which are being implemented, implemented by the regulator for the fintech sector, as you mentioned, to avoid overheating. MFIs, for that matter, because of the deregulation of the pricing on the lending side, now that actually benefited the MFI. So when your repo rate went up, obviously your MFI sector saw a 150 basis point increase in the borrowing cost, but they could pass on that particular borrowing cost because of the flexibility they had on the lending side, right? And now the reverse is happening. They got benefited, and now they are passing on the benefit of that particular increase in the lending rate to their customers by reducing the lending rates by around 50-60 basis points. Even that has happened.
Interesting insights there, Pankaj. Thanks a lot for taking time out and joining us today on this report of yours. That is India ratings on the outlook on NBFCs and MFIs. Time for a short break as the market has surged to the highest point of the day. The Nifty is nearing 22,300 now. We'll get you more on that on the other side. Stay tuned.